Most people don't lose money because they don't have enough of it. They lose money because they wait. They wait until they earn more. They wait until they know enough. They wait until the amount feels serious. And by the time they're ready, the most valuable asset they ever had, time, is already gone. So let's talk about something simple. Not millions, not complex strategies, not insider secrets, just $100. A small amount that most people underestimate, but one that can quietly change how you think about money forever. Because the real value of investing $100 isn't just the profit, it's the habit, the mindset, the education you can't buy anywhere else. Before we begin, let's be honest about expectations. $100 will not make you rich overnight. It won't replace your job. It won't magically turn into thousands without time or effort. Anyone promising that is selling fantasy, not strategy. But what $100 can do is something far more powerful. It can teach you how money behaves when it's working instead of sitting still. And once you understand that, scaling becomes possible. Investment number 1, stock market index funds. Let's start with the most boring option, and also one of the most reliable, index funds. An index fund doesn't try to beat the market, it becomes the market. When you invest in an index fund, you're not betting on one company, you're owning small pieces of hundreds, sometimes thousands of companies at once. With $100, you can buy into a broad market index, a technology index, or a global index. This is investing without drama. No constant checking, no panic selling, no emotional roller coaster. Just steady participation in long-term economic growth. Historically, broad market indexes have returned around 7 to 10% per year over long periods. That doesn't sound exciting until you realize consistency beats excitement every time. Why this works for small investors? Most beginners fail because they try to be smart instead of being patient. Index funds remove decision fatigue. You don't need to analyze balance sheets, predict earnings, time the market. You simply invest and let time do the heavy lifting. The earlier you start, the more powerful this becomes. $100 invested once is small. $100 invested regularly becomes momentum. What is the real profit here? The biggest return from index funds isn't just money, it's discipline. You learn how it feels to see fluctuations without panicking, to let compounding work quietly, to trust a long-term process. That mindset transfers to every other financial decision you'll ever make. Investment number 2, yourself, skills that pay. This is the most overlooked investment and often the most profitable. Skills. With $100, you can buy a course, books, software tools, access to platforms that teach practical income-producing skills. Skills are unique because they don't depreciate. Once learned, they stay with you. And unlike assets, skills can increase your income directly. Skills that scale well. Some skills have a higher return than others. Look for skills that solve real problems, can be delivered digitally, improve with practice, and are in constant demand. Examples include writing, design, video editing, coding basics, digital marketing, financial literacy itself. You don't need mastery to start. You need competence, and competence compounds faster than most investments. Why this beats most side hustles? Many people chase side hustles that require inventory, physical effort, constant presence. Skills give you leverage. Once you have a skill, your income is no longer tied only to hours worked, but to value delivered. $100 spent learning something that increases your earning power can outperform almost any passive investment. Investment number 3, micro-business experiments. Most people think businesses require large capital. They don't. They require testing. With $100, you can run small experiments, print-on-demand designs, digital products, simple services, reselling underpriced items. This isn't about building an empire. It's about learning how money flows. What you really learn here? A micro-business teaches lessons no book can. Pricing psychology, customer behavior, marketing fundamentals, failure tolerance. You'll learn quickly what works and what doesn't. And even if the business fails, the education remains. That alone can be worth far more than the $100 spent. The biggest benefit? You stop seeing money as something to protect. You start seeing it as something to deploy. That shift is critical because wealth grows from intelligent action, not fear. Investment number 4, high-interest debt elimination. This one isn't glamorous, but it's powerful. If you have high-interest debt, paying it down is often the best guaranteed return you can get. A credit card charging 20% interest is working against you every day. Paying it off is like earning a risk-free 20% return. No market volatility, no uncertainty, just immediate relief and improved cash flow. Why this counts as an investment? Many people don't see debt reduction as investing, but mathematically it is. Reducing interest payments increases your future spending and investing power. It also reduces stress, which improves decision-making, and good decisions are priceless. The hidden return: once debt is under control, your confidence improves, your options expand, and your risk tolerance increases. That sets the stage for future investments that do generate profit. Investment number 5, long-term digital assets. Digital assets are things that can be created once, can be sold repeatedly, and have near zero reproduction cost. Examples include ebooks, templates, educational content, simple tools or guides. $100 can cover basic tools, hosting, design resources, promotion testing. Why this is powerful? Digital assets reward effort, not presence. You don't need to be online every minute. Once built, they can work in the background. Not all will succeed, but one successful digital asset can outperform dozens of failed ones. This is asymmetric upside, small risk, large potential reward. What is the biggest mistake people make with $100? They look for certainty. But investing isn't about certainty, it's about probabilities. The goal of $100 isn't to eliminate risk, it's to learn how risk behaves, cheaply. Mistakes made with $100 are tuition. Mistakes made with $10,000 are trauma. How to think about returns. A smart investor doesn't ask, how much can I make? They ask, what can this teach me? Knowledge compounds faster than money, and the earlier you acquire it, the longer it works for you. The real strategy? You don't need to choose just one option. You can split $100, $40 into an index fund, $30 into learning a skill, and $30 into a small experiment. This diversification isn't about safety, it's about exposure. You expose yourself to markets, skills, and real-world action. That combination builds confidence faster than any single investment. Final thought: $100 is not insignificant. What's insignificant is letting it sit unused while inflation quietly erodes it. Money is a tool. Unused tools don't build anything. Whether you invest it in markets, skills, or experience, the real win is starting. Because once you start, momentum takes over. And momentum is far more powerful than money.